Hey everybody, it's Eric with Low VA Rates, and before I forget to mention, down there to your right in the bottom corner of your screen is a subscribe or a follow or a like. I don't know what it is, but it's something that indicates you like what you're seeing and you want to see more of it, so make sure you subscribe to our channel. Today we're going to talk about loan estimates and the best way to evaluate and compare lenders. Loan estimates help you shop, right? And we love our shoppers here at Low VA Rates because we know if you're an educated shopper, you're going to almost always end up with Low VA Rates once you've done your homework. So, loan estimates, also referred to as LE for short, and how they're going to help you compare lenders and make a good decision when you're shopping for a VA loan. The best way to do it is understanding this loan estimate. Specifically a locked loan estimate, but I'll likely get into that as we go into this video just a little bit further. We're going to talk about all of the things the loan estimate entails, how you can get it, when you should get it, and how to use it so that you can evaluate and compare all of the different options that lenders are putting in front of you. Now, if you haven't figured it out yet, it's Friday. You know that because you're probably looking forward to the weekend just like I am. But if nothing else gave it away, every single Friday here at Low VA Rates, we wear red as a way to say thank you. We love you. We support you. Way to go. Whatever you want to say. So let's talk about what a loan estimate is. For starters, like I said, you're probably going to hear it referred to more often than not as an LE. Loan officers just have the tendency to start spitting out mortgage jargon and mortgage terms as if all of our veterans know exactly what we're talking about. That's why we do these videos, so that you're more educated, you're an expert, just like our agents here at Low VA Rates. A loan estimate a lot of times is referred to as an LE, and it is a 3-page document that all lenders are legally required to give you. It provides a ton of critical information about your loan. For example, the term of your loan. The term simply is how long do you have to pay the loan back? Is it a 15-year loan or is it a 30-year loan? It's going to disclose the interest rate. It will let you know whether or not that interest rate is fixed or if it's adjustable. It's going to tell you what closing costs to expect. It's also going to tell you, and I should have listed a lot of these things up here, but one of the most important things on a loan estimate is the annual percentage rate, and then a bunch of other stuff. But there's a list of some of the most important things. Now, a loan estimate is not a guarantee of approval. A lot of people will get a loan estimate that never end up getting their mortgage. Okay, the approval won't happen until your application makes it all the way through the underwriting process. So keep in mind that lenders, they must give you a loan estimate once you've fully given them all of your application information. They can't deny you a loan estimate once you've given them certain criteria. And they also are obligated to be as accurate as possible because that loan estimate legally becomes binding to the closing costs that are on there within certain limitations once it's been given to you. So the loan estimate is a very important document. If you decide to move forward with your loan, okay, all of those details on the LE can only change if there are major updates to the application itself or to the loan itself. And these would be things like that are pretty big. Like, I can only change the LE as a loan officer or as a lender if your income takes a big dive, or if your savings or debts change. If certain areas of your finances change enough to where we now have to potentially change the type of loan we're putting you in, those would be big areas of change that would allow the loan estimate fees to change. But that normally doesn't happen. Another thing that would allow us to have changes in the loan estimate is if you, the borrower, decide that you want to change the loan terms or if you want a different loan program. But other than some pretty big changes like that, you're not going to see anything on that loan estimate change in any significant manner because legally, all LEs are required to provide the same information. So the format is fairly standard no matter what lender you're working with. This is done out of, this is how it was created. It's there to make it easier for you to compare one form to another. Imagine if every single lender had a different loan estimate or a different format for their loan estimate. That would be super confusing. So rest assured, no matter what lender you go to, all of the loan estimates are going to essentially be identical in format. What it won't be identical are the fees, the terms, and the interest rates. And that's where you start comparing. So if you're wondering when are you going to get that loan estimate, you have to receive that loan estimate within 3 business days of giving your lender sufficient information for them to take a loan application. You know, if you just give them your name and you say, I want to buy a home in Provo, Utah, and look, I work at Jiffy Lube, that's not sufficient information for them to give you a loan estimate. But if they start getting from you your social security number, the address of the home that you want to buy, your income, your date of birth, and they're literally taking a loan application, and there's actually a specific list of if you've given a lender these pieces of information, there does come a point in time where they're then obligated to issue you a loan estimate within 3 business days of gathering that final piece of information. In order to most accurately compare lenders using the loan estimate, you should try to get all of these loan estimates within a very short period of time or potentially even on the same day. Here's what you're going to do once that happens. You might be asking, well, how do I use the loan estimate to evaluate and compare lenders and offers? When looking at an LE, all the information on that document is important. However, there are a few key areas on each page that you're going to really want to focus on, and that's what I want to talk about right now. You can pause these videos, you can rewind these videos, because I really want you to understand what to do when you have your LE. First page, okay? Like I said, this is a 3-page document. We're going to talk about page 1 real quick. The first page of the loan estimate provides the big picture overview of your loan's terms and cost. On this page, you will want to review and compare the following. Loan term, okay? We've talked about term before, but your loan term is essentially the amount of time that you're going to be in the loan. Is it 30 years? Is it 25, 20, 15? Make sure you're familiar with the loan term, because if one lender gives you a loan term of 15 years and another lender gives you a term of 30 years, you are not comparing apples to apples, because 15-year loans normally have a little bit better interest rate than 30-year terms. Also on page 1, loan type. Okay, the type of loan you're getting. I'm assuming all of our veterans are getting VA loans, okay? But what if you're comparing a VA loan with a conventional loan? Those are 2 different loan types, and it's not going to be an accurate comparison when looking at LEs. Estimated total monthly payment. Estimated total monthly payment. Now, this is tricky because there are ways for unscrupulous lenders, that's a hard word, unscrupulous lenders, to mislead you with the estimated payment. So not as important as these things and some other stuff we're going to talk about, but I want you to be aware of the estimated monthly payment. This number is going to tell you what you're going to expect to pay every single month for your mortgage, so you might want to look for the lowest possible payment, but you want to make sure it's valid and it's not omitting taxes or insurance or something like that. Estimated closing costs. Now you'll understand all of these are estimates at this time because this is a loan estimate. There's only certain information that will allow us to be more accurate, but these are very, very accurate estimates. Because you can roll some of your closing costs into the loan, it's important that you look and compare closing costs from lender to lender, and you're going to want to aim for the lender who has the lowest estimated closing costs. Now, as we've mentioned in many of our videos, most of our VA borrowers, especially on a refinance, do not want to bring any cash to close. And on a purchase, they want to bring that estimated cash to closing as low as it possibly can be. So you're going to see on page 1 of the loan estimate a section that shows you how much cash you're going to need to ante up at closing. If you're not intending to bring any cash to closing and your LE shows you having to bring $10,000, hold the phone. You might want to figure that out early on in the process. Now let's go on to page 2 of 3 of the loan estimate. We're going to move this over to page 2. Okay. The second page of the loan estimate. What's on there? The second page provides a more detailed breakdown of these costs and fees that are going to be associated with your loan. On this page, you're going to want to review the following. Loan costs. And that is how it is labeled on page 2. Specifically in this section, you're going to want to compare any points that you're going to need to pay in order to receive your interest rate that is already listed on page 1. You're also going to want to compare origination fees. We've talked about that in other videos. But ultimately, on page 2 of your LE, watch for points under loan costs. Now, you're also going to find on here services that you can shop for. Write that down. Services you can shop for. That's exactly how it's listed on page 2 of the LE. These fees are shoppable. It's often where costs can differ between lender to lender, so it's good to try and compare these. These would be fees like from a title company, from the county recording office, stuff like that. Now here at Low VA Rates, though we give you the option to shop title companies and choose your own title company, we can tell you we work with some of the largest national title companies around, and we will always get you the absolute lowest prices on title services on our loans. But if you want to, bring your own title company into the picture, you can put us to the test on that. And if we can't, of course, because these are services you can shop for, you can always go with the lower amount if we're not able to do that with our title companies. Let's move on to the third and final page of the loan estimate. Like I said, when you guys watch these videos, you become absolute experts. There are probably industry experts that don't understand the loan estimate as well as you are going to understand it when this video is over. On the third page of the LE are some final important numbers about the cost of your loan. For example, you want to look at the section that says in 5 years. Very important. Again, this is how it's listed on the loan estimate. This little number here allows you to compare from lender to lender the short-term cost of owning your home. You're also going to want to make sure you're familiar with the annual percentage rate area on page 3, or the APR. In my opinion, this is the most important out of all of the things we've talked about, because it's the one thing that takes your interest rate into consideration and all of the fees, both the ones you can shop for and the ones that you can't, and it gives you a much cleaner and clearer look at the true cost of your loan. And if you simply compared APRs to APRs and you chose the lowest APR, that would be where you would want to go for the best price lender. Now again, as I talked about on page 1 and 2, you better make sure you're comparing correct loan types and you're comparing the correct term. Assuming page 1 and 2 on all the LEs that you're looking at are similar in nature, going with the lowest APR is the best way to go with the lowest cost loan. Now, how can you negotiate with lenders using the loan estimate? Once you've looked it over and you've compared it lender to lender, this is where you can now start negotiating. First thing you're going to need to do is identify the loan estimate that is best based on your criteria, all the stuff we just went over. Then you should take that LE and present it to the 2 or 3 or 4. I don't think you need to have 4 or 5 lenders competing. Normally 2 or 3 is fine, but take the LE that you chose to be the best, and let's say the company you really want to go to, hopefully Low VA Rates, because they educate me, they got YouTube videos, they send me red swag, I love them, but they didn't give me the best loan estimate according to my investigation. You bring that better loan estimate, in your opinion, to the lender that you want to work with, and you use it as leverage. And you say, hey, look, your competitor's doing XYZ for me. I really want to use you for all these reasons. And we have an option here. We either compete and we match and or beat, not match, we beat that loan estimate that one of our competitors offered you, and we secure your business, and you've now done what shopping is supposed to do. You've pitted lenders against each other, and you've gotten yourself the best possible deal. And in the event, which happens not often, but in the event that we just can't do it, we're going to forewarn you that we don't think this is actually going to happen, and we're going to give you all these different reasons why we think you should be careful. But if you decide to go with that lender that we cannot beat, we will sign some documents, and then we will send you $250 check if that lender is able to actually close your loan at those terms. We have a bunch of videos on how you can use our $250 low APR guarantee to either enrich yourself by $250 or become a better shopper. That's what you need to do. I want to wrap it up right there. We hope that we can always give you the best option when you're shopping. And in the event that we can't, we still feel like we have won because we've allowed a veteran to go find a better deal. And at the end of the day, I promise you, though we want your business, our main goal here at Low VA Rates is to make sure every single veteran out there is getting the best possible deal they can. Thanks for watching. Tune in next Friday for another awesome Red Friday video.